Hey everyone, welcome back to Corporate Decoder, where we try to figure out what the big companies are really up to. And today we have some news from Carlyle Secured Lending Inc. That smells like a big old team up. So, get this, Carlyle Secured Lending Inc. Their ticker symbol is CGBD, has gotten together with a few other big players. They formed a new joint venture called Structured Credit Partners LLC, or SCP for short. And who are these partners? Well, they've teamed up with Sixth Street Specialty Lending Inc., which you might know as TSLX, and also Sixth Street Lending Partners along with Carlyle Credit Solutions Incorporated. What is the big deal, you ask? Well, this new venture called SCP is all about investing in loans that are basically backed by all sorts of other loans. Think of it like a company that is good at lending money, then takes those loans and packages them up into something new and sells it to investors. This SCP venture will be focusing on really safe loans, the first lien senior secured loans, and they will be funded with money that is expected to be around for a long time and mostly has a good investment grade rating. The goal here is to give shareholders in these business development companies, or BDCs as they call them, a really spread out way to invest in corporate credit and hopefully make some better returns for the risk they take. They are kicking this off with about $600 million in commitments. This whole partnership really shows what can happen when big companies join forces. By bringing together the folks who know how to manage these complex loan packages from both Carlyle and Sixth Street, South Carolina P thinks it can offer more variety, more ways to invest, and help make better returns for the shareholders of these BDCs. And here is a neat part for the people invested in these companies: there won't be any management fees or performance fees charged at the joint venture level, which means more of the profit from these investments can go back to the shareholders. CP will be using the massive resources and expertise of both Carlyle and Sixth Street. Together, these two are veterans in managing these kinds of loan pooling investments with over 35 years of experience and more than $60 billion in loans currently under management across more than 130 different investment vehicles. This new SCP venture is structured so that each of these pooled loan investments will be fully owned by SCP. The management of these investments will be handled by either an affiliate of Carlyle or an affiliate of Sixth Street, but SCP's board of directors will be keeping an eye on things. Both Carlyle and Sixth Street will share equally in the oversight of SCP, and any major decisions will need everyone to agree. It looks like Carlyle will manage about half of the pooled loan investments that SCP creates, and Sixth Street will manage the other half. Now, to be clear, the information in this report is meant to inform and not be taken as a guarantee of future results. It is important to remember that any mentions of future expectations are just that: expectations and real-world events can be different. The company itself says we should not put too much trust in these forward-looking statements, and that actual results could be quite different due to various risks and uncertainties. They don't plan on updating these statements unless the law requires them to. And finally, as with most of these filings, they've included some exhibits. The most interesting one here for us is Exhibit 104, which is the cover page interactive data file. This is basically a digital version of the report that computers can easily read and process. So what do we think about this formation of Structured Credit Partners JV LLC? On the surface, it looks like a smart strategic move. By combining the strengths and experience of two major players in the credit market, Carlyle and Sixth Street, they are creating a powerful new vehicle. The promise of better diversified exposure and enhanced risk-adjusted returns for BDC shareholders is certainly appealing. The fact that they are structuring it to minimize fees at the joint venture level is a big plus too for investors. This suggests a commitment to profitability flowing back to the investment owners. However, we always need to keep in mind the inherent risks in these types of structured credit products. While they are focusing on first lien senior secured loans and predominantly investment grade rated CLO debt, these are still complex instruments. The long-term economic outlook and potential shifts in interest rates and credit markets could still impact performance. The success of this venture will heavily rely on the continued strong performance of the underlying loans and the skillful management by both Carlyle and Sixth Street. The shared governance where material decisions require unanimous approval is a good sign for balanced decision-making, but could also potentially lead to slower operational progress if disagreements arise. The initial capitalization of $600 million shows a significant commitment, but the true impact will be seen as SCP deploys this capital and generates returns over time. It will be interesting to watch how this joint venture evolves and whether it truly delivers on its promise of enhanced risk-adjusted returns for investors. Alright, that is our breakdown of Carlyle Secured Lending Inc.'s latest filing. What is your take on this new joint venture and what it could mean for the market? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. And don't forget to check out our Discord community linked in the description. Thanks for watching. See you next time.